Are we live? We're live. Okay, folks. Welcome to Thursday Night Stock Charts Live. Thanks for being here. And the only earnings report I have to go over tonight is a stock I own, and that's SoundHound. Initially, it spiked up. This is reminiscent of SMCI the other night. Spiked up, only to reverse. I have not looked at their numbers yet. 54% growth. They beat on EPS. They beat, yet they're down. Sign of the times. Sign of the times. This is a tell. Were it not for being such a small company, I would say it's a bigger tell. But SMCI certainly was a tell about the overall market. Not so much Meta, but other names out there that reported decent earnings still got walloped. So let's say hello to folks and let's get to it. My crowd tonight, OG1. Welcome. TLT sucks. We had a bad 30-year bond auction today. No bueno. You'll get, excuse me. You'll get another bite of the apple on TLT. As a matter of fact, we're going to be talking about that in a little while. My apologies. I'm going to cough. I'm going to mute and cough. Okay. Hopefully that should be that. All right, let's get to it. What we're going to talk about tonight is primarily Jamie Dimon and what he said today and why he's worried about stagflation, why he's worried about potentially not having a soft landing. Now, I don't always agree with Jamie Dimon. But on most things I do. And on this topic, I do. We'll go to talk about Jamie Dimon in a moment. Mr. Pete, welcome. Hope all is well with you. All right, so, I got this off a zero hedge. And I warned last Sunday, beware of the villains that are out there trying to relieve you of your money. And they do it by way of hype. They hype the stock market. And I don't like this headline off of zero hedge. I'm a huge fan of zero hedge. Maybe it's just a copy error. But, okay. So here we have it. Big tech bond yields, they bid. They moved up higher today. Bitcoin bid today. Bullion bid today. But rate cut hopes fade. Where does that come from? Nothing that I've seen so far has told me that a rate cut is under threat. And I'll go right to the source of that. And that is the Fed Watch tool. September hike, 100% probability. That has been unchanged. So where they're coming off with this headline, I have no idea. So be careful. No matter what you read, where you read it, be careful. These so-called media elites, and not that zero hedge is one of them. I'll give them a pass on this one. But if I continue to see stuff like this, I'm going to call them out on it. So this is the reason why I mentioned on Sunday Night Futures Live, that we were creating a new community, and it was going to be launching free on August the 20th. And it's going to be not some cheap Discord channel. It's going to be powered by Mighty Networks. If you're not familiar with it, it's like a Facebook type format. It's very expensive. All right, it's cost me a lot of money to build this out. So I'm going to keep it free until we get some organic growth in the community. And the purpose of the community is to share ideas, whether they be trade ideas, ideas on the market, and get a conversation going. So that way we have a meeting of the minds, a melding of the minds, buyers or sellers of like mind, or whatever channel you want to be in. It's a I hate this phrase, but it's a safe space. Put your ideas out there and don't worry about judgment. All you need to worry about is the quality of feedback. And if we don't get quality feedback for certain individuals, they're going to be do their Twitter thing by insulting people. You know, we don't need that, right? So it's going to be a really cool thing. You can either scan the QR code in front of you or use the link below on YouTube, link above on Twitter, and sign up. It's a wait list right now. It'll be free. You're never going to be asked for a credit card until such time as I charge, I don't know, $9 a month to be a part of the community. But that's not going to be until we get the community up and running and growing organically. So sign up, take advantage of it. We will be capping membership. So take advantage of it. Please act now. Use the QR code. It'll take you over to this page here. And we'll see you on the other side. August the 20th, Labor Day weekend. So what drove today's market? Now, it's so funny. The powers that be in the media are going to want you to believe that it was jobless claims today. Jobless claims. A report that beat by 7,000 jobs, or the lack thereof, or jobless claims, or the lack thereof, which is great. We don't want to see jobless claims. That's great. I'm an American. I love my country. But they want you to believe that the reason why the market rallied today was because of jobless claims coming in better than expected. So let's put this into context. I looked it up on Statistica. I can never say that name. The U.S. has 133.4 million full-time employees. 7,000 less jobless claims are going to spike a market. The triple Qs up 3%? I don't think so. So don't let them take parking space up in your head. This is not the end of the rise of unemployment by any stretch of the imagination. Unemployment, as measured by now both the U3 and the U6, and as well as the household survey and the establishment survey, which is corrupt, they're all going like this. They're all going up. One weekly report is not going to negate 3 months, 4 worth of data. So don't let them take parking space up in your head. We are in very treacherous waters right now. It's a relief rally. Might we go to new all-time highs? Sure. What do I know? What do I know? But if we see this market begin to stall out, we'll be leaning into shorts. So we'll go over the weekly charts in a moment. We'll see how we're poised to close out the week. So forget about economic data, worthless. So here's Jamie Dimon. Jamie Dimon, dubious about a soft landing. JP Morgan Chase CEO Jamie Dimon warns of possible stagflation. Possible? How about foregone conclusion? It's going to happen. There's a lot of uncertainty, says Dimon on CNBC. I've always pointed to geopolitics. We know we have a lot of that right now. You can go on to here. Where is it? This is Edge. All you see are saber rattling with China, fighter jets, warplanes, really incredible. And this has been going on for a couple of weeks. Disputed Chinese waters, more stuff about. I don't even click on this stuff. It's not that I'm looking at it, clicking on it, and they target me with them. Look at this. More Russia snapped Navy unveiled. More Chinese fighter jets. It just goes on and on. More fighter jets, submarines, blah blah blah. I don't even click on it. So it's as if we're being groomed. We're being groomed for something bigger. Back to good old Jamie Dimon. Here, this is a tweet. JP Morgan CEO Jamie Dimon on CNBC. America's alive and well. He's got to say that. Skeptical of inflation reaching 2% goal. That's Jamie Dimon. Oh, things are going great. However, 2% inflation? I don't think so. That's typical Jamie Dimon. Trust me. The power brokers in Washington, D.C. read this and said, But anybody that knows Jamie Dimon, they were waiting for the counterpunch. And then they got this, skeptical of inflation reaching 2%. That's a gut punch to the establishment. That drives them crazy about this guy. He just doesn't play 100% ball. For the most part, he plays ball. Fed commentary and rate cuts don't matter as much as people think. Agreed. Savings could impact spending. No doubt about it. We've been talking about that for months. Credit doesn't indicate we're in a recession. I think what he means by that is that there's still too much credit out there. Not that there's been a lot of credit driven up by the consumer. That's my interpretation. So usually what happens is right before you have an event, a calamity in the economy, the banks, what they do is they cut down your credit limits. So that way, if you haven't used a credit card in a while, you've maxed out all your other credit cards, they don't want you going to them last. They don't want to be the last chair, the last seat for musical chairs. So they cancel or they reduce your credit lines, etc. And plus, if they reduce your credit lines on something you're maxed out on already, guess what? If your interest payment takes you above that credit limit next month, guess what? They charge you a fee for being over your limit. So they generate more cash flow. So that's generally what they do. So I think that's what he means by credit does not indicate we're in a recession. That's because the banks have really not cut back on credit that much. Talon, welcome. Falcon. Hey, Bob, you get into crowd at 200? No, I did not. When it went below 200 in the pre-market on Monday morning, and I was watching, and I was like, God damn it! I bought stocks on Friday. I was still short, so I wasn't worried about not being hedged on my current short position. That, however, is that I was worried about adding on to new positions that weren't working well already into what could be a meltdown. So I balked. So to answer your question, no, I could easily say that I did. I didn't. I wish I could say I did, but I'm very honest. And no, I did not. But we will be watching for a setup. But that being said, I would probably already be out of crowd, to be honest with you, because they don't know what the problems are going to be with their earnings for the next 2 quarters easily. Fed assets under management total assets, not assets under management, continue to decline slightly. So you can see that the Federal Reserve these past couple of weeks has really throttled back on their runoff of their balance sheet. Jim Rickards, put your crash helmet on. You might need it very, very soon. Why? Israel escalates. Unknown caller. Israel escalates bigly against Iran. We know that. Iran vows harsh revenge. This attack was supposed to happen on on Monday. It didn't happen. So I don't know how worried I am about this, but it is a concern for the market. If it does flare up, no doubt about it, it's going to be a problem for the overall equity markets. So while I don't want to dismiss Jim Rickards, who I happen to have a lot of respect for, I don't think that at this time, Israel and Iran are as big a factor as they were on Monday morning. So we have a new VP who is a complete cluster F. GOP plan to handle Tim Walz. This guy is a white Kamala Harris. I mean, he is so far left of left. It's ridiculous. And God forbid these two get into office. Back to Jamie Dimon. What else is he worried about hurting this market? Well, it's simple. The quantitative tightening, the elections. If these two nitwits this merry band of misfit toys, Kamala Harris and where's his face? I got to be careful here, but he has a nickname. And if you don't know his nickname, if there are children in the room, cover up their ears. If you can mute your mic, your audio for 5 seconds, I'm going to say his nickname. If you don't already know it, I'm going to say it. 3, 2, 1. Hope everybody's muted. Tampon Tim. Why? He put female sanitary napkin dispensers into boys' bathrooms, public school bathrooms, and they ripped them out much to their credit. Not that we condone vandalism, but much to their credit for having enough testosterone to be completely pissed off about this, they ripped them out of the bathrooms, the kids. So this is what they plan on trying to put into the White House. So God forbid they win. Because this is what happens next. Socialism has always ended in severe poverty, misery, always. Why are young people so fascinated with socialism? Because it's for free. It's a perception of free. It's as simple as that. I don't even get the headline here. I don't understand the tweet. If you're offered something for free and you're in debt or you have nothing going for you, what are you going to do? You're going to say, yes, please, more please, because you're a loser. You're a loser. So you need the government. And you'll do exactly what they tell you to do to keep your stipend coming in. So here's the world since 1945, post-World War II. The world, by and large, the Western world, has been on a tear. And I guess you got to include China and Japan here as well, and Korea. Latin America, playing catch-up. Venezuela. Look at this. This was one of the most prosperous nations on earth in 2010. Now, decimated. Same thing holds true for Argentina. Whatever socialism touches, and have no doubt, this guy, where's his face here? I keep losing his face. This guy here is a communist. So if they get into office, have no doubt, this market is going down. Another person who's going down, and I mean that with all due respect, is Kathy Woods. I mean, I bring her up from time to time, but my God, she buys at the worst possible time. And she holds forever. And when she does sell, she sells at the worst possible time. Case in point, CrowdStrike. Here we go. We have CRWD. So CRWD, they have a little bit of problems with, well, everybody. They have the outage. And the shares just tanked. What was she doing when the shares were just beginning to tank? She was buying. So investors pulled $2.2 billion from ARK in 2024 as Kathy Wood underperforms NASDAQ by 30%. I never say this about people that are nice, but I don't understand how she still has a job. I got to be honest with you. She's got to have a board of directors. I'm not sure how she still has a job. She must have a lot of influence over that board. But this is absolutely abysmal performance. So this is out there that's running money, if you can believe it. She had her heyday back here, a bit of luck. That was it. COVID was luck to her. More problems with the bond market. This has not gone away. So the liquidity in the bond market, the higher you go, the less liquid we are. So here's 2020 spiked out. We don't have 2000 here. We don't even have 2007. But these spikes in the lack of liquidity out there, or stress liquidity conditions, it's a major, major problem, and it's got to get resolved some form, some fashion. And this could be the one of the pins. I think there's multiple pins out there that could pop this bubble. Japan was certainly one. Them raising rates, the carry trade came unwound. We've warned about that many, many times now, and equities just took a nosedive. So they have backed off of those rate increases. They're probably just going to slow them down unless they want to live with hyperinflation, which I doubt. But this just goes to show you what happens when your debt to GDP gets to a certain point. I think they're like 225% of debt to GDP. It's ridiculous. They own most of the government owns most of the bond market and a lot of the stock market. So it's like a snake eating its own tail. It's crazy. So they go to raise interest rates and everything falls apart. So it gave the dollar a little bit of breathing room here. But I took a look at the dollar today, just before we went live, and it's not looking good. It'll probably look good on a weekly chart. The daily chart, not looking good. So we're going to talk about the Jamie Dimon's call for stagflation and how do we fight the stagflationary monster. What else do we have up here? This is a light news day. There's not a lot of good stuff to go over. Projected Treasury issuance. So we spiked out on forward-looking time frame. This goes into 2025 now. Think about this. COVID is over. It's been over for years now, yet they're still doing emergency spending under COVID, from the COVID times. And this is what they plan on spending next year. And the Federal Reserve is going to come in and they're going to cut interest rates. What is that going to do to the US dollar? It's got to go down. It's got to go down unless something terrible happens over in the EU, and they appear to be going hyper socialist overnight, especially Britain. They're not part of the EU, but you know what I mean. They're all France, England. Those two in particular are hyper socialist at this point in time. I really worry about those two countries a lot. Let's go to the weekly charts. Not a lot of conversation to be had here tonight about economics, but there is a lot of conversation to be had with regard to threats that are out there in this market. And I talk about this all the time. And this is the yield curve weekly chart. It is updated to reflect today's price action. And we are very, very close to uninverting. We are at the highs of the week. So for anybody thinking that nothing can go wrong, we had our one-day bounce here, and that we're probably going to make new higher highs. Well, probably is the operative word, probably. But are we probably going to take out all-time highs anytime soon? Probably not. Not when you have the steepening of the yield curve. And this is just a weekly chart. If you want to get freaked out, look no further than this chart here. I go over it all the time. I know it's really, really, really busy, but it tells you the history of the yield curve and what happens to equities when this thing gets going in the wrong direction. 2000, 2007, COVID, and the reaction in gray by the S&P 500. Correction. I didn't even put the NASDAQ on here. Back here, 2007, massive correction. COVID, massive correction. Here we are yet again. rising up. To put this into context, is that going to be copy and paste? Copy, copy. Well, let me paste. Okay, you get the drift. You are here. So did I go covering shorts today? No. No. We covered shorts earlier on late last week, but not today. So here we are, liftoff, and in fact, we have now taken out the highs of 2023 on the yield curve. Let's go to comments. Fed started weekly Treasury buybacks yesterday. I believe it. Franklin, welcome. Falcon, you picked it perfectly as usual, and you, yeah. You picked it perfectly as usual and didn't trust your call. I trusted my call. I didn't trust the market. So, to jump in there and to make that purchase, I would have done it where the market's stable. But, when you're looking into the abyss, we bought on Monday. We bought TQQQ. We doubled up on our position there. We since sold it. But, we did some buying at the lows on Monday. But with CrowdStrike, it has its own unique issues. And, if the market began to break down further, then CrowdStrike would have broken down further. And then what was the next support level? I didn't know. Therefore, I didn't want to test it. I opted to buy the Qs, the leverage product, the TQQQ. So we did get long, some, and we rode the market that way. We put profits on that yesterday, near the highs. Then the market rolled over. TC Burton, welcome. They put dispensers in CAE elementary schools. The maintenance guy said the kids trash them. Yeah, I mean, how sick do you have to be? I mean, how much delusion, or I don't know whether he believes it. I don't know. Maybe he's a grifter, but I got to believe that some of these people believe this stuff. And, it's like Orwellian. It's so Orwellian. I can't put it into words. And, this guy wants to be in the White House. I'm sorry. I would be calling him TP Tim. That's the abbreviated version because we're family friendly here. But I wouldn't call him by his name. I just wouldn't. I wouldn't call him governor for the next 6 months or whenever the election is, or 90 days. His name is TP Tim. That's it. I would never let anybody forget. Plus his war record, of which there is none, except for abandoning his team. Any thoughts on? Yeah, that's what 3 consecutive months of rising jobless claims. There's some historical basis there. I don't know how old that indicator is, so I did a little bit of research on it because I got to be honest with you, I never heard of it before. So I did some research on it about a week and a half ago, 2 weeks ago. It didn't look like there was a lot of data, and I believe Sam is still alive. I believe it's a female, and I hope she lives a great long life if I am right. But I don't know much about the history. I'm big on historical precedents. And she could be 1,000% right. I don't know. But I do know anecdotally that when you get jobless claims that are rising, that's when bad news is no longer good news for the economy or for the stock market. It's been that way since when I started trading in the 90s. So if that's what that alludes to, then yeah, I'd be in agreement with it. Bob, Sean wanted you to review Mo if you get a chance. Sure, I could do that. I know it's down 62 cents on the week because I looked at it a little while ago. As a matter of fact, I didn't go to the members area to check and see. And recently, folks, just going back to the before we get into the weekly charts, for those joining in, we have the free trading community launching on August the 20th. Use that QR code in front of you to scan you on your mobile to go over to this page and get entered for free. You're not going to be asked for a credit card, even when you do enroll. You're not going to be asked for a credit card for now anyway. For those that sign up now, you'll be free forever as long as you don't cancel. But after a certain period of time, we're going to charge a small fee just to pay the cost. That's all. I'm not going to make money on it. But it's expensive. It costs me several $100s a month for all the infrastructure. So I got to make that up somehow because that's thousands of dollars a year. What am I looking for? Oh, I got to go to the members area. So yeah, while I'm doing this, the morning live streams that I do, I've been trying to do them at 7:45 in the morning, the pre-market. Those will be housed after August the 30th in the free community. You can get to the replay later on in the evening when I put it out in the on YouTube for the public. But if you want it live and get alerted live pre-market, enter your just sign up for the wait list. And also the chart requests, those are going to be going into the community as well. So we're not going to take them on the live stream. We're going to take them in the community. And as a matter of fact, the Monday night futures, that Labor Day, that will be aired in the free community. So to get it real time, you're going to need to be enrolled in the community. I'm trying to buy time here as I get to the members area. All right. All right. So we have Peter, BRKB. Welcome, Peter. New member, Peter. And he's putting me to work here. BRKB. CCJ. Wolf. We have SOXS. I didn't get to Donnie the other day. I meant to. My apologies, Donnie. CMG. UMC. Mo for Sean. Okay. So that way I don't have to write all these down and keep track. This makes it a lot easier. Fees, brother. Fees. Those little nickels and dimes, they add up to a lot of money. Okay. Franklin, thanks for the heads up for Sean. I appreciate that. We'll definitely go over it. All right. So back to our regularly scheduled program. All right. So we went over the yield curve. Folks, even though we were up today, so was the yield curve. Now, so Jamie Dimon is worried about stagflation. Why would he be worried about stagflation? Could it be because that the CRB commodity index just did a rip your face off reversal bar on the week? We were trading down on the week. What do we do by the end of business today? This is one of the most bullish setups I have ever seen in my life. Massive. I wouldn't call this a cup. I would call this a saucer with handle formation. Either way, if we close out the week at where we are or better, we're going a lot higher. And the Federal Reserve is going to cut rates. And if they don't, If they don't, the stock market's going to go like this right before an election. The poop is going to hit the fan. So a massive breakout here. This chart in and of itself is indicative of inflation. 10-year yield, weekly chart. Big reversal bar. Big reversal bar. 30-year bond auction did not go well today. That being said, we were also oversold. Very, very oversold. Overbought on bonds, causing yields to be oversold. Can they go up higher? Yeah. They can. TLT, 20-year bond ETF. Big reversal bar here. One trading day left to go. Massive volume. Let's go to the daily chart. So here's what we're looking at here on the TLT. I don't think that this rally is over. I thought we would hold 96. We did not. Then again, we didn't go buying either. There's your descending wedge formation. If they break this down below this lower band, I'd be a buyer of the TLT for at least a dead cat bounce on a daily time frame. Tips, Treasury inflation protected securities, bearish reversal week. Let's check out volume here. I'm not sure why these are down. Maybe they closed up on the day, but with the CRB commodity index breaking out and the Fed going to cut rates, it doesn't make sense. Yeah. So they closed down, but they rallied off the lows of the day. That makes sense. The dollar. Reversal bar on the week, but I want you to take note of this. Let's memorialize this because it matters. Both lines on Stokes, trading down below 50. Rallies tend to fade. Rallies tend to fade. So if you're buying dollars right now, betting that the Japanese yen is going to crash to new lower lows, it may not be the best bet, because when you take a look at this chart on a daily time frame, this is a pretty bearish chart. And you may be saying, wait a minute, what are you talking about? It's up. It's up on the day. How dare you? How dare you, Desmond? Bear flag setup. Same thing is back here. Same thing is back here. History repeating itself. So tomorrow, if we get a break on the dollar, I could quite possibly be adding to our gold mining position. And in fact, gold. Euro still up on the week, but well off the highs of the week. Let's check out the day. Do we have a rally at hand here? Maybe. Yen really got clocked. Bank of Japan official came out saying, no, don't worry about rate hikes. Forget about those. Our economy doesn't like those. We don't worry about them. All he was really trying to say is we're going to go a lot slower now. So it's probably going to be 6 months before you see another Fed or BOJ rate hike. Volatility. Almost unchanged on the week, if you could believe it. Daily chart. No, yesterday was a very bullish candlestick. I thought we were going to move up higher. We did not. We failed. If we break down below 21.97 and we close there, probably going to rally next week on the equity markets. Dow Transports. They're now up on the week. Amazing. Amazing. Daily chart. You buy this? I don't know. What do you do here? You buy it? We didn't take out yesterday's highs. We didn't take out the prior day's highs. We recaptured the support level. The question is, do we hold it now? Do we hold it? Volume, very light today. Dow Jones Industrial Average weekly chart still down about 0.75%. Volume heavy. Daily view up over 1.75%. We have a breakout. So do we expect a V-shaped recovery? I don't know. I don't know. You know, V-shaped recoveries are rare. They're like white elephants. You know, you had one. The last one I remember being fascinatingly powerful was the 2020 V-shaped recovery. So, you know, maybe it'll happen again. I never want to say never, but we need to recapture support levels. We did not here. 39.5 is key support. High of the day, 39.508. We closed at 39.446. Tomorrow's another day. How was volume? A little bit light. SPY, weekly view, still down, just shy of a 0.5 percentage point. Not bad. Daily chart. And I kind of mentioned this the other night. You know, going into today, I was more bearish than bullish, no doubt about it. The only thing that I think I said last night on last night's market wrap was that these stochastics, in particular on not the S&P 500 as much, but on the triple Qs and another chart, they were hooking up, and that's pretty bullish, but not enough to make me get overly bullish when you have a market that's teetering on a brink. So I decided to wait, not add any more to what we already had. We raised a little bit more capital yesterday, so we had a little bit of wiggle room in case we did fall apart today. And we'll see. We're still in a downtrend channel. It's clear. It's defined. How is volume today? Above average. Trip Qs, weekly view, down only 0.15%. Shocking. But look at the volume here. Rising sequentially. Daily chart. No new daily high or high today. A closing high, yes. Intraday high, no. Do we break out? That's the question. Do we close above 450? If we close there, then we have to say, okay, now next week, do we retest 450 and do we bounce back? If we bounce back, then we have to reconsider our positions. You know, we can't come into the market every single day with an opinion and say, you know, I'm bearish. You know, today is a reason to say, all right, maybe I need to rethink the extent of which I am bearish. But what must the market do to convince me that this sell-off is over? So you make your own rules. So let's do that now. Let's make our own rules and say, okay, if this, then that. If we well, it's already up here. As a matter of fact, let's do this. If we close above 450 tomorrow and next week, because that'll be a weekly recapture, we will have recaptured critical support. Next week we retest 450 and then we reverse to close up on the week or higher. Then I'm bullish, you know. But it's got to do that. Just because we had a one-day rally here doesn't mean I gotta dump my shorts and buy stocks hand over fist. No, that's stinking thinking. Ideally, what happens here is that we don't close above 450. If you're really, really bullish and you want to buy this market because you are uber bullish, the worst thing you want right now, not the worst thing, what you would prefer to happen right now is that next week or tomorrow, the next couple of days, we pull back. We do it on volume on a daily time frame, which is declining to the downside. Then you take your crayon out. Let's say we pull back here. So then I wanted to keep that green. Here, we're going to keep that green. That's the stock price pulling back. So then we're going to take our trend line. We're going to go like this, play connect the dots. That's our trend line. Now what we want to see is the stock rebound and take out 450 and close there, because that makes it a higher low. And then a close above 450 makes it a higher high. And if you decide you're going to want to fight what's setting up as a probable rally, then good luck. Now, if we close above 450, are we out of the woods? Are we going to new all-time highs? Not so fast. Because don't forget, we have a little problem up here. That's this line here. This is your primary downtrend channel. Remember, we've gone from higher highs and higher lows to lower highs and lower lows. That's a correction. We're still in that correction, despite the fact that the triple Qs closed up 3% on the day. Correction is not over. We need to break out and above this upper band of resistance, wherever that price may be at the time. So are we out of the woods yet? Not yet. Wish I could say we were. I've always said that the counter trend rallies, when you're in a sell-off, are more ruthless at times than the sell-off itself. So to think that this 3% rally is something extraordinary, it's not. Just go back in history, look at prior corrections, prior bear markets, and look at the counter trend rallies. Rip your face off rallies, I like to call them. But you need to not be over leveraged to the short side. You need cash on the sideline so that when you do get your great setup, that you have capital to put to work with a good setup. Right now, this is not a good setup to me. It's a setup that is developing. I won't deny that, but it's not one that's got me saying, "Oh my God, I got to cover shorts." It's got me thinking, but I'm not there yet. So that's what the Qs need to do. Now, what I was talking about last night was this. It's far improved right now. I warned, I said, you know what? These are hooking up. These are hooking up. That's the only bullish thing I found on the chart last night. Small caps, they rebounded. But they're down about 4% on the week. This is the leverage product. So not the IWM, but the leverage product. Technology, almost unch on the week. Amazing. So, I look at this chart and I say to myself, what's missing? What's missing from this chart? What's missing is a double top. We've never had a double top. We have just gone straight down. Strange, right? Maybe that's what we're setting up for. The semis, massive reversal week. On volume, no less. Biotechs, still lagging. Staples, I want to be bullish here, but I'm suspect. I'm suspect of staples. Discretionary names, hate them. I wouldn't touch discretionary names with the 10-foot pole. Down 1.35%. Emerging markets, with China included, up 1% on the week. Without China, China actually did pretty well this week. Or did I misread that? Did I misread that? No. China did well this week. Energy. Bullish key reversal bar. Good stuff. Daily view. Now we need a retest. We need to pull back, higher low, What did oil do today? Oil is now up 3.63% on the week. That's one day. All that happened in one day. No, I'm wrong. Yesterday too. My apologies. I'm bad. Holy cow, what a rally here. Wow. Big rally. Gasoline prices, bullish key reversal. So we have the CRB commodity index rallying. We have oil rallying. We have gasoline rallying up 3.5% on the week. Natural gas prices. I don't want to use oil. That's a leverage product. Natural gas prices up over 8.5% on the week. Folks, hold on one second. I want to make sure this microphone's working. Testing. 1, 2, 3. Inflation is here. It's alive and well. The CRB commodity index is rallying along with energy stocks or energy products. And the Federal Reserve is going to cut rates. Think about it. If you think that you've seen the hounds of inflation unleashed already, you ain't seen nothing yet. They cut those rates. I guarantee you, after that first rate cut, they're going to be saying over and over again, we're going to be data dependent. Don't expect this next month. They're going to try to pretend they're not going to cut rates for a long time. That's what they're going to do. And the market is going to punish them because the market knows it needs more than one cut. This is so bad. It's crazy. The only way they can fight inflation right now is to pretend they're not going to cut rates more than one time. We own this. This is liquid natural gas. We're not positive on the week here. I'm glad we didn't bail on this. The reason why if you guys are looking for a stock that's yielding over 11%, we're getting paid on this one. The reason why we're in this stock is this. This is the setup. Wrong chart. Here's the setup. Look, this is a monthly chart of FLNG yielding 11.5%. Look at this wedge formation on FLNG. This thing was going to rip our faces off to the upside, or at least shorts his face off when this unloads. This is a massive consolidation. As the saying goes, the longer the consolidation, the greater the validation of any breakout. So once this thing starts ripping through $30 a share, it's going a lot higher. And natural gas prices, energy prices, CRB commodity index, they're all up on the week. They're going to cut rates. Gold. Still down on the week by about a 0.25 percentage point. Let's go daily view here. So we broke out today on gold. Higher low, Stokes, higher low, RSI. Bullish. GDXJ. Weekly view. Still down 3.41%. An inside bar today, no new high, no new low. Stokes rising. Palladium, we own Palladium. It is not treated as well, but I'll tell you this week, a beautiful reversal bar. Let's go daily view. You can see how the commodity complex has just really woken up to the fact that the Federal Reserve is going to cut rates. Looks like we broke out on a daily time frame here. If you're going to look to buy PALL, A, it's very volatile. B, it remains in a downtrend channel. C, wait for a pullback and a retest of a breakout point. I'll give you a number at which to buy at. Consult your financial advisor. Look for support at 81, 82 bucks a share, and I'd be a buyer at that level. Yes, we've owned it for a little over a month now. Nugget, this is a leveraged ETF of the senior miners, down 5.5%. Stokes hooking up. So members, I may be looking to put on a call spread here tomorrow. And you may be saying, you have different rules for different products. You're looking at the queues saying you're waiting for this, that, and the other thing. Yet with Nugget, you're ready to put on a trade here. The reason why I'm willing to put on a trade here is because A, I'm using a defined risk strategy, call options. B, I'm using a hedge on it. C, Nugget generally trades with gold. Gold reacts to inflation. The CRB commodity index, oil, gas, etc., whatever you want to shake a stick at, palladium, they're all rising. So wouldn't it be wise right here, right now, to initiate, well, we're down 5.5% on the week, we're already long of it, but a speculative long strategy on Nugget tomorrow. I would like to see a retest of 40 bucks a share. We've been trading in this range for the past few days. I think this gets resolved up. If it gets resolved down, we don't execute. Silver, crushed on the week, but I got to say, this is a buy. I would be a buyer here. I think that's good. Oh, we need to go over Mo for Sean. You can never forget Sean. All right, so a weekly chart of Altria down 1.21%. This is in the consumer staples space. Consumer staples look good. They've held up well in this environment. I don't know how well they're going to do if we do get a continuation rally on the Qs. Staples are not sexy. They're simply not sexy. So if we do get a rally in the SMH, Qs, etc., money's going to go there. Money's going to come out of the staples names. So Altria may suffer a bit under that scenario. Now, daily chart, yeah, it's struggling here. So you see these wicks, right? What this is implying is that you have resistance above. But how did this resistance really get there? We're at all-time highs. We haven't been here all that much. Well, you have a lot of resistance there because that's exactly where the prior lower band of support was. So what this is, we gapped down, we did a check back, which was successful, and then we failed again. That is no bueno, exclamation point. So would I buy Altria here? I love the company. I love the yield. I'd love to do dividend captures on it. I think this stands a good chance of breaking down. I would not be a buyer here. I think it's too risky. Now, when am I wrong? When do I get optimistic? On a close above $51.40 per share. That's when I get optimistic. Till then, we watch. I wouldn't short it, but I wouldn't buy it. How was volume today? light. I would be very careful here. All right, let's do some chart requests and call it an evening. All right, folks, we're going to be using our friends over at TrendSpider. God damn, this rallied to 244. I called it a 200, and I didn't pull the trigger. Bad Bob. Bad Bob. All right. There's always a next time. There's always a next time. TK Jane, you just spin anything and everything around to beat up Democrats. I'm very fact-based. I don't spin anything. What's there to put a spin on? That's the beauty of the topic. That's why I call him TP Tim. There's nothing to spin. The man signed legislation to put female things for females in boys' bathrooms. I didn't make it up. He did it. He's got to be held accountable. It's not spin. What is wrong with you? Please leave the channel. Christ. I gotta read it. I'm an addict. I gotta read this. Go into your comments about TPs in elementary school. You are forgetting that kids are taught by you. Oh my Christ. You are a sick person. Just go away. Go away. I hope you're in your mother's basement. You're typing away on your computer at 35 years old, and you have a great long life. Enjoy the government check you're getting. I pity you. I really pity you. That, my friends, is what's destroying this country. But TK Jane, thank you for the comment. Like, subscribe, please. Okay, let's do some chart requests. BRKB. Okay, so you can't hate on old Warren. As hokey as he is, the son of a gun has got more capital on his balance sheet right now. So if there were a fund I would invest in, this would be it. Would I buy this now? Probably not, to be honest with you. Probably not. If they close it above 441 per share, I'm a buyer. This is a monthly chart, though. Let's go weekly view. This is a tough one. I'm a buyer on a close above 439 per share. If you want to scratch the itch here, let's check the daily chart. We can't forget the market environment that we're in, folks. We just can't do it. Now, to be fair here, I want to be accurate. That's really, it attempted to break out today. I would be a buyer. I would scratch the itch. Suppose you want to buy 100 shares. If we close above resistance tomorrow and we do a retest next week, I would throw on 20 shares. Scratch the itch. Put your stop right below the support level here, and then buy more on a breakout above this upper band of resistance at around 4. I keep saying 438 per share. So I'm skeptical of it, as I am of the entire market. So, but if this goes if it goes south, the beauty of it is he's got more cash on hand than he's ever had before. So he's going to put that capital to work. So if there's one stock, or if I have a list of stocks I want to buy when there's blood in the streets, like Monday times 5, this would be one of them, because he's got so much cash to put to work. I'd want to buy this. CCJ. Cameco Corp. We haven't looked at this one in a while. I don't like it. It did bounce off of a price target we set. This is my manual line here. We bounced off of it. And to be fair to TrendSpider, I got to share props here. They did rally off of the lower band of this rising support level. Folks, if I didn't mention TrendSpider, automated technical analysis, if you're on your mobile right now, you click that QR code there. It'll bring you over to their sales page. Use discount code CON35. And if they may even have a better deal than what I get. I get 35% off. Sometimes they even have better sweet deals. But just use that QR code or the link below on YouTube, link above on Twitter. Back to our regularly scheduled programming. I saw TZ Burton put a note in here. I will sign up for your new trading site, Bob. Yeah, please do. Love to have you. Love to have you. All right, CCJ, a weekly chart, we bounced. So is it time to buy? No, definitely not. You need a higher low here. We spoke about this earlier with regard to the Qs. What you want to see is that we pull back. Here's your pivot point. What's a pivot point? A pivot point is when you rally, then you pause and you pull back, and you're able to take a line from a prior peak and play connect the dots. That's your pivot point. So right now, our downtrend channel, despite the fact we're up on the week, which is a lot to be said for this week, we are still in a downtrend channel. It doesn't just go away. It's a process. Things need to happen here. What must happen? We must pull back and at least put in a higher low. If not, retest these support levels below. Then we need to break out and above this upper band of resistance. If it breaks out tomorrow, I would not chase it. If after we pull back, perhaps down to the support level, 36 bucks a share, round it off, and then we rally up and through this pivot point, which is now at $40.66, I would buy here and then add more on a close above $40.66. That's the shot. The beauty of trading it this way is, okay, what if this is really not the bottom? What if we just found some technical buying and the bottom's not in? Well, if you buy here small, well, you put your stop loss right below. You have a small loss. And if you wait for it to rally up to $40.66 and close above that mark, then you know exactly where to put your stop loss, right below that. If it fails, you get out. That's CCJ. Wolf. Terra Wolf. Great symbol. I will come back to the daily chart. Beautiful reversal bar here. Whoever bought this micro stock at the lows of the week has got brass you-know-whats. And he's probably one of the guys that ripped the TP dispensers out of the boys' bathroom in Minnesota and California. Bravo. So interesting reversal bar, but same deal as with CCJ. We broke out of the downtrend channel. That's a little bit different. And in fact, what we have here is a higher low. So this is a really good setup. So next week, here's the buy point right here. Any retest of around 383 per share. You have the rising lower band of support below. You also have a prior resistance level below as well. You have a cross of support at which the share price is bouncing off of to what should be support levels. So I like this on a retest 383 next week. Excuse me, tomorrow or next week. Tight stops though. You're trading off the daily chart. If we fail to hold 383, you got to get out. And the weekly chart, I don't know. I don't like the weekly chart yet. We're still in a downtrend channel. I would really wait to see how we close out tomorrow. I would really wait to see that. I don't like the weekly chart. It's a great reversal bar. The question is, can we continue up higher? I would check the short interest here. How much short interest is there? Perhaps it can. It's done it before, but you need a lot of shorts to squeeze this thing. SOXS. This is a bear ETF on the semis. No, not yet. I wouldn't buy it. Definitely not. This really, are we extended or were we extended? Yes. We're trading above the Bollinger Bands, trading above the Keltner channels. But this is not a bottom. The only thing that would cause me to get interested in this is if tomorrow on a daily chart, they gap us up and into this candlestick and we have an inside day, meaning no new high, no new low. Or next week, same thing. Rather than putting in a new weekly lower low, we gap up. We don't need to take out this week's high next week, but all we need to do is trade inside that range. And all of a sudden, this week's floor becomes a support level. And as long as we hold this week's lows, guess what? This thing gains strength. Even though it doesn't put in a new weekly higher high for a week, 2 weeks, a month, who cares? As long as we're not breaking down to new lower lows, it's all that matters. So the longer we consolidate within this week's range, the greater the probability of a breakout higher. So I would wait to see if those two events happen. CMG, Chipotle Mexican Grill. Weekly chart, one trading day left to go. I love that they split this stock. Thank God. But even though the share price was over $1,000, the options were so illiquid. It drove me crazy. Horrible markets in the option markets on CMG. I think you need to retest. I think you got to come down and retest 54.32. This is a weekly chart, and these dashed lines are not weekly support levels. The one in blue is a solid line. What you're looking at below is a quarterly support level on a weekly chart. Trend Spider, 35% discount code below. Or, where's that QR code? It went away. There it is, QR code for Trend Spider. My new toy, QR codes. So let's go daily view here. I think you need a pullback. Maybe not. This week has me so screwed up. It's like we're in a parallelogram. In reality, and all kidding aside, we're in a wedge formation, an ascending wedge formation. So this can get resolved up, but I think we're going to trade in this range for a while. Volume was not good today. I'm not a buyer until we break out above 55.21. The most ideal setup here on CMG is that we take a few days and we trade within this range and then we break out. That would be a much more powerful breakout. Right now, it may break out, but it may fail. All right, the longer we stay in this range, the greater the probability of any breakout holding. last one up is UMC, because we did Mo. For good old Sean. United Microelectronics. I've never heard of this company. Good chart. Retest of $8.35, give or take a dime. Doesn't have to be right on the penny, but I'm a buyer there. I would not be a buyer right now. What's the weekly chart look like? Yeah, we need a retest. We got to pull back to a retest. This is a pretty nasty sell-off. We need a higher low. I'm big on higher lows. If I'm bullish, I want to get bullish, I need higher lows. Very, very adamant about that. You don't have that here. Look for the higher low at or around 814 on a weekly chart. Why I ask about CMG? Because someone asked Kramer the same question last night. What was Kramer's response? He goes by fundamentals. He doesn't go by charts, so I won't mock him. PZZ earnings look good today. Announced Divvy. Okay. All right, we'll leave it off with Michael, PZZA. They announced today after the close. I'm not seeing much action here. No, it looks like this morning. All right, so earnings are in the books. Weekly chart, it stopped going down. You know, it's that's step number one to buy a stock. It stopped going down. Would I buy it? No. No, too much topping action. What the markets are telling you here, pardon me, folks. What the markets are telling you here is that these wicks, shadows, topping tails, whatever you want to call them, middle finger to the man, whatever you want to call them, there's a sellers above, and you got to overcome them. So I would not be a buyer into that resistance. Where I'd be a buyer is either down here at $40.39. That gives me a tight stop right below. And I'd add more on a rally up and through $56.60. $45.60 rounded up. And that's it, folks. Thank you for being here. Have a profitable trading day tomorrow. Like, subscribe, you know the deal. And don't forget, folks, don't forget, use that QR code on your screen. Head on over. Use your mobile. The Contrarian Trader free community. Free for now anyway. But you got to sign up. Got to act quick. I think we're at last look. It's going to be higher now after the show. Last look, we had about 325 people already signed up, waiting to become members. So please, no credit card required. Just a wait list right now. When we go live and you launch the day one, there will not be a credit card requested of you. It's not going to be the premium area. There'll be a link to the premium area. You can always sign up if you like, but we'll be doing a lot in there. So a lot of stuff that we do on YouTube and on Twitter is going to be in the community plus some. So again, have a profitable trading day tomorrow. Have a great weekend. I will talk